Ugandan shillings, and these 10 Ugandan shillings came to 12.5 billion shares that actually the company was able to list on the Uganda Stock Exchange. Now, for the bonus issue, the thing is that you don't have this open to the public. The bonus issue is only to the shareholders within the company. That is, people who are already holding stake in a company. Those are the only people that are entitled for a bonus issue. Otherwise, the rest of the investors will only be able to trade on the secondary market after the bonus shares have actually been bought. Now, we saw the price of Bank of Baroda Uganda decline from 85 shillings on average to 15 shillings on average after that announcement, and this was as a result of the fact that the price had to drop in order to accommodate the bonus shares that actually were on offer by the banking institution. However, Bank of Baroda Uganda has had an impressive performance. Yes, in terms of activity, we have in the last 3 months the company ranking the second in terms of the most traded on stocks on the Uganda Securities Exchange over the period, and Bank of Baroda Uganda has so far traded a volume of 50.8 million shares within the period of 3 months. That is 26th July to 27th of October. Bank of Baroda Uganda also is valued, the value of the last 3 months is valued at least 757 million Ugandan shillings over the period, with an average of 806,422 shares on every trading session. Well, yesterday they had a volume of 136,694 shares traded at 2.18 million Ugandan shillings. That's on Friday rather, not yesterday, because Friday was the last trading day for Bank of Baroda Uganda. Now, the shares outstanding currently at Bank of Baroda are 15 billion, and market capitalization is at 239 billion Ugandan shillings. That is Bank of Baroda there, the biggest gainer for the day on Friday. Equity Bank Limited also appreciated, and the movement was at least by a 2.51% appreciation, moving to a price of 951.03 Ugandan shillings. East Africa Equity Bank Limited is cross-listed from Nairobi Securities Exchange, and currently they have a market capitalization of over 3.52 trillion, making them the second most valuable on the Uganda Stock Exchange. Equity Bank Limited has not traded most recently. They haven't had any trading on the Uganda Securities Exchange. The stock is quite stuck without much trading and without any movement at all in the market. This is quite due to a number of factors that probably the shareholders are not willing to sell, and then the activity also on Nairobi Securities Exchange is much higher. So you find that investors would rather actually trade this stock on Nairobi Stock Exchange rather than the Uganda Stock Exchange. On the other hand, East African Breweries Limited as well added 0.65%, and this was to close at 3,314.19 Ugandan shillings. Kenya Airways as well added 0.08% and closed off at 95.98 Ugandan shillings. Now, on the losing hand, unfortunately, Stanbic Bank Uganda lost on Friday, and this was the first day of loss since the company started the spree of gains just a couple of weeks back. And yes, rather on when you look at Friday trading, they lost 2.24 Ugandan shillings down to a price of 31.26 Ugandan shillings, which was a 6.69% depreciation in price. Stanbic Bank Uganda is currently the fourth most valuable. stock on the Uganda Stock Exchange at a value of 1.6 trillion Ugandan shillings market capitalization. The bank traded 392,000 shares on Friday and approximately had a turnover of 12.3 million Ugandan shillings at a 51.2 billion market capitalization closing. Now, the current performance of Stanbic has been quite good, except for Friday, where the company lost at least 2.24 shillings, a 6.69% depreciation. And when you look at how the company dropped from 33.50 to 31.26 Ugandan shillings, it's quite not something to worry about. The company still has a 4-week gain of at least 0.84%, and it still does have a quarterly gain of 20.2%, as of course the company also still has a year-to-date gain of 48.9%, as the company began the year with a 21 shillings price on the market, ranking it the second in terms of year-to-date performance. Stanbic maintains the #1 position as well in terms of the most traded on stocks in the last 3 months. Within this period, the company has traded 71.1 million shares on average, about 1.13 million shares that have been traded. Well, that gives you a picture of how resilient the Stanbic stock still is, much as there was a loss on Friday. The company has at least one of its highest pricings within the last 5 or so years at 31 shillings. And this is dedicated to probably some of the incentives that the company does provide for its shareholders, including a dividend, and they have maintained their dividend position and tried to be as dedicated as possible. They have also maintained a high profit level that has kept them going all throughout these past 5 years. Now, looking at other bottom losers, we had a Nation Media Group. Nation Media Group lost 4.69%, down to 501.20 Ugandan shillings, whereas KCB lost 1.68%, down to 488.67 shillings, and Phantom Investments lost 1.32%, down to 211.51 shillings, whereas Jubilee Holdings Limited lost 0.06%, closing off at 4,636 Ugandan shillings on the last trading day. And that's of course the summary there, but in summary as well, in terms of volumes, Stanbic stood out with the highest volume of 392,000 shares, and Bank of Baroda was in the second place with 136,000, and MTN Uganda had 11,194 shares, whereas Umeme had 2,000 shares that were traded. Umeme closed off the day at 414 Ugandan shillings. It has remained at that price for this past 1 month and still maintains its value proposition position there. Regarding the performance of the USE market indices, the all-share index at this shed of 0.08 points, down to 930 points, representing a 1-week loss of 0.6% and a 4-week loss of 0.98%. On the other hand, the USE local company index declined due to, of course, the losses on Stanbic Bank Uganda, and declined by 1.13 points, while down to 278 points on Friday. Well, in other news regarding the Uganda Stock Exchange, NSSF, or the National Social Security Fund, has declared intent to invest at least 199 billion to acquire 10.55% stake of Airtel Uganda's 8 billion share initial public offering on the deadline day. That was on Friday. Now, the fund's investment in Airtel gives an opportunity for millions of NSSF investors to own part of a successful company in the fastest growing sector, known for innovative services, according to Mr. Patrick Ayota, who is the managing director of the National Social Security Fund. Now, when you look at the amount that could have been actually invested, they would have invested at least over 300 billion for the shares, but Airtel incentivized its offering to institutional investors, which it says are long-time investors and acquire the most stake. So they raised the bar to at least 4.7 Ugandan shillings per share, 47 Ugandan shillings per share for all institutional investors. Institutional investors really refer to those institutions that decide to invest on behalf of their stakeholders or on behalf of their members. National Security, Social Security Fund is one of those big investors in especially the equities market here in Uganda. So deciding to go into the Airtel initial public offer does really well come out well for the Airtel IPO, but on the other hand, retail investors are still also on a low, and we are now hoping for the very best. Of course, the IPO has been closed, and we just are waiting for the result of subscription, and then we can tell how the stock will be performing on the Uganda Stock Exchange come 7th of November. Well, let's take a very quick breather, and when we return, we continue with the story on NSSF, and we go into Kenya as well. Kenya's
Momope customers baffe bonna ne tuba encouraging okukozesa Momope kati neera ye transaction esinga gye tusinga okukozesa ku factory yaffe.
Congratulations for being the winner.
I'm happy, very happy. Use Momo. You will also get chance to get a bike or other gift from Momope.
Abawala bonna ab'emikola mukozese Momo. Momo nnungi.
Chikola sense ne?
Momo.
Momo!
Use the Momo app or dial *165*3#. Smart24, driving business.
Welcome back, and we're still rolling with the financial markets. My name is Anthony, and this is the second episode. When you look at financial markets, we do give you analysis of the markets as they are here in East Africa and across the globe. And right now we are going into the Kenyan market. But before we do so, the NSSF, the National Social Security Fund, like I mentioned earlier, is planning to inject 199 billion in the Airtel initial public offer. Now, Airtel initial public offer started off on the 31st of August and was meant to run up to the 13th of October. However, on 13th of October, Airtel Uganda management actually put a notice that they had extended the offer up to the 27th of October. This was last Friday, and this was due to the fact that they had a number of investors coming in at the last minute, and they didn't want to lock out such rather MTN Uganda listed with a total of 4.47 billion shares, and yet that was undersubscribed to back then in 2021. However, the company has given dividend at least twice since listing, that is for 2021 and for 2022. As a result, NSSF has become MTN's second largest shareholder and helped the company meet the 60% subscription goals that was in 2021 during the initial public offer of MTN. On Friday, financial markets experts actually told journalists that although Airtel Uganda had been working with the National Social Security Fund in order to resurrect least 352 billion Ugandan shillings, supported by an increase in contributions and positive returns on the investments. During the year, the trustees continued also to invest in near-cash assets such as unit trusts in order to maximize opportunities for daily cash contributions, especially from projects, and also manage the scheme's liquidity. According to Dr. Elizabeth Patricia Nsubuga, who is the scheme's chairperson, board of trustees, noting that the scheme had also divested away from equities as a way to shelter its assets against high volatility. Now, here's the thing. The equity market in Uganda, first of all, is not that active, but also the volatility is high. In other words, when you invest today, your money can drop any second and it can rise any second, right? And that's a general. I mean, it's not unique to Uganda. It's everywhere in the stock market. That's one of the challenges of investing in the stock market. So the option there for investors usually is the unit trust or the collective investment schemes. These are collective investment programs where you have a couple of investors coming together through a fund manager to collect money or funds, and the fund manager invests these funds on behalf of the investors and gives them a return on investments at least annually. And that annual return can be broken down into monthly and daily gains. And what happens with the collective investment schemes, or the structure of collective investment schemes, is in such a way that they have liquidity because members are collectively always getting money. When you look at the way funds come in, because every once in a while a member is actually putting in money and another member is withdrawing money, so at least funds are available at any point in time when investors require those funds. And that is why most investors opt for unit trusts. Not only retail and individual investors, but now also institutions are tending towards the unit trusts, and that is exactly why they have become so popular at the moment. Financial market instability has worked against equity investors, especially creating 264.94 million loss for the Makerere University Retirement Benefit Scheme in foreign exchange losses in the year ended June 2023. Now, the scheme made a loss of 246.94 million shillings for their investments in equities. Now, when you look at a number of pension schemes in Uganda, they have lost a significant portion of projected revenue from equities, especially from the Kenyan stocks, after investors in emerging and frontier markets move their money to developed countries such as the United States and the United Kingdom, where interest rates rose due to high record inflation. National Social Security Fund, the country's largest pension fund, recently reported that it had lost 1 trillion Ugandan shillings due to foreign exchange losses. That's actually very significant. In its 2022 annual report, the Uganda Retirement Benefits Regulatory Authority said disruptions to the global economy had impacted performance of equities, which as a result had eaten into the member returns. And according to Mr. Godwin Kakumba, the scheme secretary, he said that they had asked the regulator to surpass the threshold for investments in government bonds of 80% to 86.7%. So the thing is, clearly, institutional investors are also tending towards the safer market, which is a good and bad thing at the same time, because when you invest in treasury bonds most, you're giving government more appetite for borrowing, and the more government is borrowing, the higher the interest rates will be. Because here's the thing, banks will want to invest in the government, institutional investors would want to invest in the government, and at the end of the day, the credit access is going to be cumbersome for the businessmen, for the individuals who would want to borrow money from the banks, because banks now are competing for or with the high interest rates that the banks, whether that the government is offering, at the end of the day, that will translate into suffocation of businesses, especially in the private sector, which is not something that you would want to see. However, the scheme that is the Makerere University Makerere University Retirement Scheme reported a 355 million increase in administrative costs, but gained from the sale of land and investment income, helping it to report 10.3 billion increase in net assets to 53.96 billion. The scheme's assets are expected to grow once it recoups in an outstanding 8.12 billion debt from government, part of which 17 billion out of the 25.3 billion, according to Dr. Nsubuga, and had been recovered since the reception in 2022 financial year. That is the story that we'll be following up very closely, especially with the retirement benefit scheme. Retirement benefit schemes are some of the big institutional investors we have in East Africa, and we do have to follow up with such investments as they affect how your savings are being utilized at these schemes. Now let's move ahead to Nairobi and have a look at the performance of Nairobi Securities Exchange as per the close of Friday. Now, at the last weekday of trading on Nairobi Securities Exchange, a total of 79 million shares, actually approximately 80 million shares, was traded in 1,171 deals, corresponding to a market value of 1.03 billion Kenyan shillings. Compared with the previous day, the data shows an improvement of 612% in the volume and 524% in the turnover, and an 18% improvement in the number of deals. Generally, Friday was a good day on the Nairobi Securities Exchange. The market $1,986 deals that are valued at 5.93 billion Kenyan shillings over the period, with an average of 6.53 million shares that have been traded per trading session. That is Safaricom there for you. Now, Kenya, when you talk about Kenya's dates, that's one of the things that is hindering market movement and macroeconomic factors there that have led to quite a number of problems in Kenya's economy. The size of Kenya's debt from the World Bank crossed a 1.5 trillion Kenyan shillings mark. Now, 1.5 million Kenyan shillings, that's about trillion Kenyan shillings, that's about 9.99 billion US dollars in June on increased disbursement and depreciation of the Kenyan shillings. Now, fresh data from the Central Bank of Kenya shows that Kenya's outstanding loan to the multilateral lender stood at 1.57 trillion Kenyan shillings, or 10.45 billion US dollars at the end of the previous financial year, from at least 1.43 trillion Kenyan shillings at the end of May. 110.9 billion Kenyan shillings growth in a single month now means close to at least 60% of total owings to the multilateral lenders that belong to the World Bank. The sharp growth in external debt has been mainly attributed to new disbursements in the last month of the financial year, and also accelerated by a sustained depreciation in the local currency that has shed off 17% since the month of January. Now, the 309.4 billion Kenyan shillings increase in the external loan is also attributable to disbursements made during the month and depreciation Well, that's it from the Nairobi Securities Exchange and the Uganda Stock Exchange. Last week we had a very interesting conversation with Mr. Odundo, who is CEO of the Nairobi Securities Exchange, and he gave some of the things that Nairobi is doing to promote local investment. In Uganda, we also need to promote our local investment base, and one of the ways we can do that is through this program, by you, our viewer, getting to invest in our own markets as we make movements. Now, we had a conversation with the Airtel communications manager, that is Mr. David Barunji, together with the broker for the Airtel IPO, Crested Capital, as well as the transaction advisor, that is Absa Bank. We would like to give you these events, but after this quick breather. My name is Anthony. Don't touch your dial. Stay with Smart24 TV. We drive your business.